Good evening, everybody. This is James Ramelli from Alpha Shark Trading, here to talk about how to pick strikes and targets for income trades. Now, I'm not going to jump into how to determine when the best time to set up a strategy like an iron butterfly or an iron condor is. We'll leave that for the workshop. But one of the questions that I get more often than that is if I know that I want to put on some type of credit spread strategy like an iron condor or an iron butterfly, how do I know where to sell strikes? How do I know where to buy strikes? What strikes do I pick? And how do I determine my targets? Well, let's take a look at an example here in the SPY. And let's say that I wanted to do that for this week. Well, I can see it's trading at 209.98. So for the sake of rounding here, we're going to call that 210. Close enough. So I look at the straddle price for the 210 straddle, and I can see that it's about $1.82. So what does that mean? That means that I can subtract that from 210 and add that to 210 to get my targets. So my downside target is going to be 208.18, and my upside target is going to be 211.82. Pretty simple math, right? So now how do I determine which strikes I would want to sell? Well, if my upside target is 211.82, I would want to sell strikes inside of that. So I'd look to do something like this. So here we have the 11 half, 12 half call spread that I'm selling. And if my downside target is 208.18, well, then I would want to sell something inside of that. So I would go something like this, the 208 half, 207 half credit put spread, and I can see I can get this for 33 cents. Now, this isn't that rich of premium here because obviously the market is in a cycle of lower volatility right now, but this is how I would pick targets and strikes. If this thing was worth about 4 or 5 more cents, I would actually be somewhat interested in that trade. I could also say I'll sell the 210 straddles and then pick downside options that are inside of that target range that I pick. So I might pick the 208 212. So now I can look at a $2 wide iron butterfly for $1.31 credit. It's a much better risk versus reward. This is how we set up our targets. In the workshop, we go about explaining what chart patterns and what particular volatility cycles look like that set up for a good time to do this. We also talk about how to pick the levels, but this is really important. If you're someone who struggles with picking strikes when you're looking for credit spreads, this is a fantastic method to use what the market maker is implying to determine those targets. So thank you guys very much. Once again, this is James Ramelli from Alpha Shark Trading. Everyone have a fantastic evening, and as always, happy trading.